for investors all over the country. So pretty much,
Okay.
yeah. So
So is
maybe
he a
you'll find
wholesaler
yourself.
then?
No, no, he's a real estate agent, commercial.
Oh, okay.
Yes, but yeah, I'll certainly keep you in mind there. So that'll be
Please.
interesting. Yeah. Because you probably know it's not about money out of your pocket, right? We find the money. I'm in
Yeah.
large families. You saw that from the uh, video, recently changed to that from my
Sure.
previous experience. So it's all about finding the money and leveraging that. And are you with Pace Morby at all in this community?
Sorry, can you say that again?
Are you in are you in the community with Pace Morby? No?
Yes.
You are?
Yes.
Okay. Okay.
Yes.
Are you in sub two then? Or gauge?
Yeah. So just was about to do a sub two deal and unfortunately it just closed. So I'm new on the side of the sub
I
two
see.
transactions.
Okay. Yeah, okay. It's like drinking from a fire hose, isn't it?
It
So
is.
material. And it seems like quite bewildering. I know if you're new to that. So it takes a while, but certainly. So how could I help you?
Yeah, absolutely. So yeah, really kind of what I'm looking for right now is just investors who are willing to invest in multifamily or larger, mid to large single family.
Okay.
I'm really looking right now for multifamily.
Yeah, that's
Here
what.
in Spokane, there is an extreme need for um, apartment complexes, whether they're one bed or two bed, they're
Mm,
going like wildfire.
wow.
So especially affordable housing.
Yeah.
Um, and there's actually a really good, you know, pool of tenants that need that affordable housing that leave the
Mm.
house in fantastic condition
Right.
as
Yeah.
well.
As you saw
So,
from my video, I started there, started with the commercial smaller apartments, 5 to, well, it was 32. So I ended up with over 100 doors and I made a whole bunch of mistakes and wrote this book, Cautionary Tales from Real Estate Investing.
okay,
Bring it out. It's on Amazon and I'm writing this book, Demystifying commercial real estate. It's that one, and investing in large multifamilies. And
look at
recently
you.
started my YouTube channel as well as 21 educational videos on there. I give you that. Just expressed an interest in multifamily.
Absolutely.
Um, and as I say, working with my realtor friend, I'm pretty experienced when it comes to motels and hotels. So let
Love to hear that.
that.
Yes.
Especially the demystifying commercial real estate investing. There's quite a bit in there and about buying not just hotels but shopping centers, coin laundry, all that sorts of thing. So
Yeah,
and he'll help you with all the terminology and the underwriting and what to look for. So
sure.
find those on Amazon. Um, the other thing I'm doing as well, as you're fairly new, um, I'm promoting legal Shield. It used to be called Prepaid Legal Services Incorporated, PPLSI. It was the first time round. I wasn't sufficiently capitalized. I made all the mistakes in the book, as it were. I had uncollected rent in the six figures over my time of the heaven knows, and going to court representing myself every Tuesday, and you can never get the money back. So I wish I'd known about what I came across just 3 weeks ago, in fact, with Legal Shield. It works exactly like your car insurance. So you pay car insurance a premium every month, right?
Yeah.
In the hope that we don't have an accident, right? But if we do, they'll fix your car or replace it. And if you're in real estate, you need attorney services, whether you're going to sue and protect your business, or if you're being sued, or if you're acquiring a real estate, is a contract. Wherever there's a contract, you need an attorney to look it over and make
Mhm.
sure everything's good. So,
Absolutely.
what Legal Shield do is you pay a monthly thing like insurance, and then you're a member. So you never have an attorney bill, And so it drastically reduces your costs of doing business because you will end up being sued in real estate, especially when you're dealing with large multifamilies and hotels and things like that.
Yep.
You probably know you need three attorneys, with large multifamilies. You need a securities attorney, you need a litigation attorney, and you need a real estate attorney, all specializing in those things. So you sound like a serious guy. And Pace, I don't know whether you come across it yet, but his attorney is Sean DeClaire, and he spends, I think he showed the bill the other day. It was like $14,000 a month in legal fees, and I don't quite have his ear, but I wish he'd known about Legal Shield. They save himself a fortune, right?
100%.
Yeah,
Percent. Yeah, even doing residential, the amount of times that I've had to show up to court and deal with these legalities
right,
is
right.
like, so getting yourself in a multifamily, motels,
Yeah.
hotels. I can only imagine what that.
It's unbelievable. And so I'm shouting this from the rooftops because, quite honestly, Caleb, if I'd known about this, I would still have my business today, all my properties.
Hmm.
Because I thought I couldn't afford an attorney at $750 an hour and then trial and court car. Now with Legal Shield, you get over 100 hours. So even before the trial, they say, this is what I'm on retainer for over 100 hours. Can you match that? They say, oh, let's settle now. You know?
Yeah,
Because-
100%.
so it's fantastic. It's unbelievable. We've got a business. The most you can't spend more than 200, by the way. The most expensive one, which is the Business Pro, is 185 a month. But
Wow.
if you compare that to paying 750 an hour, if you need an
Yeah.
attorney, plus they're gonna likelihood these guys have got over 20 years experience, because the company have them on retainer, so they pick the best to represent them,
Hmm.
see. So let me just cancel this a minute. Let me I'll put the website up for you to check it out.
Please do.
I have a lot of people calling me this morning. I'm a
It's a
busy
busy
man.
man.
Yeah, I'll these text me. There we go. So yeah, check that out. And if you have any questions, I can also send you videos as well and help you there. But I'm over the moon that I discovered that. Now I feel like peace of mind in my real estate. I'm also
Yeah.
now more risk averse. I'm braver because I
Hmm.
know I now have the legal backing to look over any contracts and things and point
Yep.
anything out that I should know about before going into a deal, including any JV deals, and
Yep.
things like that. So it's very exciting to have proper legal representation.
100%. I couldn't
Yeah.
agree.
So that's what I'm promoting there. So yeah, check that out. Do you have any
Absolutely.
questions from me from my experience or anything you want to ask?
Yeah, absolutely. So, I mean, what do you see your best method in regards to creating cash flow? Because kind of my thought process is, the way that I do business as far as having investors is I give them preferred returns. So they're getting the
Oh,
returns really kind of before I'm collecting.
yeah,
And they're getting more of a larger sum after a refinance.
yeah,
Um, I don't like to just sell my properties because then I have none, they're not in my name anymore.
right.
Um,
That's right.
so do you see the BRR method being the most efficient way in regards to paying back investors?
Yes, that's what they're focused on. That's the first number they'll ask you is the IRR, certainly, because they
Okay.
want to know what return they get on the money and base that over the life of the project. So, for instance, our large family, we do 3 to 5 years. So we calculate the IRR on a 5-year basis, what they will get. We also do C-class buildings in a B-class location and do our calculations based on that. We aim to double the value of the project within those 5 years. So they'll get a preferred rate of return of at least 7 or 8, 8%, depending on how much they put in as an
Okay.
LP. And so they'll get the quarterly distributions every a quarter after the first stabilization period, which is usually 9 months. So our stabilization usually is 9 to 18 months period. And it accumulates as well. They don't lose those distributions. We just distribute after 9 months usually. Yeah.
Okay. And is that a lot to do because of just vacancies prior? Is
Yes.
it
Yes. We
okay?
like occupancy 70 to 85%. We like it as low as 70 because we can renovate those vacant units, 10,000 a door, and bring them up to market rent right away. So we can quickly improve the cash flow
Okay.
in that stabilization period.
Okay.
Yeah.
Perfect. And so you were saying that the 7 to 8% ROI is kind of that number that you guys are seeing?
Yeah, yeah. For the quarterlies,
Or quarterly?
it may end up higher depending on the project, but
Okay.
I've got a lot of educational videos on my YouTube again. I go into that a lot about how to calculate everything, and that might be of interest to you to look at how.
100%. Yeah, I am more than willing to right now. I mean, I'm 25, so I'm definitely old enough to get my foot in the door.
Yeah,
And like I said, just kind of with my experience, I'm confident that I can definitely create a profitable business. But it's definitely more, I want to be a sponge all around, and I'm not afraid to make mistakes and learn
yeah,
from those mistakes. So,
yeah, yeah.
um, when you are seeing the financing happen on here, so first off, are you guys when you investors are going in here, you guys are just paying pretty much the down payment, correct? And then any work that needs to happen to the property, or are you guys paying for the property outright?
We do for the larger ones. It depends on the size of it. So we start from 10 million all the way up to 100 million right now, 100 units or more doors. So
Okay.
and we do a 10% capex. So we put that in reserve. So we do the capital raise, and so it includes all the closing costs and everything else. So the capital raise, and I'm on the GP side, so I do help with the acquisitions, obviously, and that's all part of the closing costs and part of the capex, capital raise. And then most of these deals, there'll be one or two a year. Most of them will be for accredited investors. Are you accredited?
I am not. No, sir.
Okay, okay. So you'll have to wait for the non-accredited ones, the 506B um, ones, and they come along. They do come along. So, and you can squad up with others and come in as a business entity and an LLC for an LP position. And if you're involved, obviously, in the acquisition side, which you would be if you act as a gator, are you a gator as well?
No, I am
No.
not.
Okay. Okay. So you might squad up with some gators to get some money at closing and part of the acquisition. So if we, for example, take down a 20 million, we do 5% EMD at so the acquisition will be around $1 million for the acquisition fee. So that's
Yeah,
good payday. This is life-changing money when you're dealing with large multifamily. So
100%.
you can definitely reach your financial goals in a reasonably short period of time. Because not only get your money at closing, right, which could be 120 days from now, typically 90 to 120 days, you're going to get quarterly distributions, which gives you that regular income. And at the end of the day, end of the project, you're going to get a share in the equity. So,
100%.
yeah.
100%. So, yeah, so I'm just kind of looking over some of my notes here.
Mhm.
So when you were seeing these, these large multifamilies, what are you seeing being the biggest factor in regards to creating more cash flow? Is it, I'm talking outside
Question.
of the unit. So,
There's the major, yeah, when we're looking, it's usually through a broker, getting on the broker's what's called VIP list, okay? So they're aware of what's coming up. So they're not on the market yet usually. So you got to build up credibility with the broker. So here's the things that we look for. The first thing is the general areas. So the biggest killer of large family, well, any large commercial really, is insurance. That's the biggest concern. Especially hurricane prone. We just had a Hurricane Helene, right? I mean,
mhm,
devastated areas. The insurance, it kills them. Yeah, okay, they insure themselves as well with bigger companies, and it ends up in what Lloyd's of London worldwide. These
mhm,
big disasters happen, but the rates go way, way too high. So we just can't tolerate that. That will destroy cash flow, to answer your question. So high insurance is a no-go. So we avoid all the coastal areas where hurricanes can come in. We'll go, and what we do is we look at the fire rating, okay, for the local fire, because that will give a good indication of what the insurance is. And we
mhm,
like to invest in red states because of the political situation. Obviously, it's got to be landlord friendly states as well. And then, of course, we're looking for B class areas. We don't want to be in areas that are not desirable. But we look for C class for value add, reducing expenses is all part of increasing the cash flow, doing the value add, adding in valet services, covered parking, reserve parking, valet trash, um, adding in coin laundry, for instance, any number of things like that. Yeah, even Uber,
okay,
because some people they choose, they make a lot of money. They just choose that lifestyle
yep,
and rent and don't own. They see it as a liability, and it is actually. Owning your own home is a liability because anything that takes money out of your pocket is a liability. Yeah, if you're
100%.
rich dad, poor dad, right? And
I was about to say, it sounds a lot like Robert Kiyosaki right there.
yes, that's right, exactly. Yeah. So owning your own home is yeah, yeah, okay, you get appreciation, but you can't count on that. That's cyclical. So I mean, if you talk to Grant Cardone, he's a billionaire and he likes to rent. Okay. So people choose that lifestyle of renting. Yeah.
100%.
Yeah.
So let me ask you, so if I was wanting to provide you guys with the potential to invest in something I'm doing, do you guys prefer that, I come up with a property? Do I need to present a plan of just an overall attack and then provide a property to you guys? Or how does that system work for you guys to approve a certain amount of funds to be invested from your end into complex that I'm looking at?
Yeah, it's a long process. Is underwriting a property is essentially what you're asking. So if you come across a property and it's just an address, it's very minimal bird dog. We'd expect more participation, to get certain pay. So we'd recruit you as part of the acquisitions team, so you get rewarded handsomely, and so you stay with it until it closes, and hopefully even do some capital raising as well, so you'll be part of the team if you certainly find something, and then we could, especially if it's local to you, we might even have you wear the asset manager's hat, and be boots on the ground, as it were. Like you said, you're in property management, so you're already
Yep.
experienced, so that would be a good fit, and you get part of the share of the equity as well. So not only would you get paid at closing, as part of the acquisitions team. You'd be an asset manager, property manager, and yeah, you'd be handsomely rewarded. You'd be the manager of the manager. We'd employ a property management company and you'd oversee them, so
Okay.
promoted uh position because you can only do so much managing yourself. You probably already know that with 650 doors, right?
Yep.
Yeah, yeah. So
100%.
yeah,
100%.
yeah.
Um, so yeah, I mean, I guess just really some other questions. What do you guys charge interest wise usually?
What as a investor, you mean?
For investing, correct?
What do we charge? It's you get a share of the. You're looking for a return, so we're not charging anything as such.
Okay, so just returned.
Yeah, yeah. So there's no charge. It's not like a lender. An investor is putting their money in, like think of it like a bank account. They give it gets a yield on it, it's the IRR. So there's no charge in that
Okay.
sense. Yeah. Sorry, that threw me a little bit, but
Not a problem at all.
yeah,
Not a
yeah,
problem.
yeah. So yeah, if you're a PML, you charge. You have a certain rate, you're gonna charge, and so many points at closing and things like that. But that's not how this works.
Okay,
Yeah,
100%.
yeah.
So,
Hmm.
so what is there a specific kind of bed and bath amount or um, just overall size complex that you guys find to be more efficient than, whether it's a smaller complex or a bigger complex? Is there any specifics there that you guys tend to find?
Every acquisition is unique, and we look at it from the ideas to make money for us and our investors. So if it underwrites well and the numbers work out, then that's what we'll go for. It's
Oh,
yeah. So it varies. It might be in a good school district, for instance. So one bedrooms and studios might not make sense. We might want to do two or three bedrooms, per door. If it's a good school district and take advantage of young families, starting out, for instance. And then if it's one bedrooms and studios, they're usually single people and we like pets and charge the pet rent, and things like that. So it all depends. Yeah. Yeah.
okay.
Yeah. But we're just about run out of time, Caleb. But these are great questions. Yeah, consumer content, and then book another call with me anytime you like. Um, and calendly.com/Graham Norris. Yeah, and we'll keep this going. These are good questions.
That'd be fantastic. Thank you, Graham. I appreciate your time.
I appreciate yours. You have a wonderful day. All right. Bye bye for
You as
now.
well.
Bye.
Bye.